Hello and welcome back to Beautiful Minds, your weekly data driven investment analysis series. I am your host, and today we are diving deep into week 23 of our master analysis system. This week, our algorithm scanned 1,504 stocks listed on BSE. Out of all of them, only 16, yes, just 16, made it to elite by category and sitting right at very top with the highest enhanced master score of 279 is Saksoft Limited. So in today's video, we are going to do complete deep dive, fundamentals, technicals, valuation, pros and cons, portfolio update, and a full list of top 15 elite speaks. This is going to be a long and detailed video, so grab your notebook and let's get started. And if you are watching this is for the first time, please do like, share and subscribe to Beautiful Minds. It really helps us reach more genuine investor like you. All right, let's go. Before we jump into the numbers, let me quickly walk you through what we will be covering in today's video. First, I will give you a quick overview of how the scoring system works because understanding the system is key to trust the output. Second, we will look at the rating distribution across our entire universe of 1504 stocks. This gives you sense of how bullish or bearish the market currently is. Third, I will go through the complete top 15 elite by list, names, sectors, and scores. Fourth, and this is the main event, we will do a complete deep dive on Saksoft Limited, which is our number one ranked stock this week. We will look at every single fundamental parameter, technical indicator, valuation, and pros and cons. Fifth, I will walk through our entire journey. Enter at 142 rupees and I will explain you what our target and stop loss are. Sixth, I will give you full portfolio update where each of our four positions standards right now. And finally, I will talk about risks and red flags so we know actually what to watch. Let's begin. Let's start with section 1, the system overview. Now, many of you have been asking, how does this system actually work? How do you score 1500 stocks in one go? So, let me explain this clearly before we look at the result. This system pulls data from 9 different dimensions for every single stock. These are price data, which gives us current price, PE, PB, and market cap, all sourced from publicly available market information. Shareholding patterns, which shows us promoter percentage, fills and deals trends. Cash flow analysis, looking at operating cash flow and free cash flow history. ROE analysis across 10, 5, 3, and 1 year periods. Balance sheet health, recovering debit to equity. Reserves and assets growth. Sales growth CAGR at 10, 5, 3 years, and TTM. Profit growth CAGR and whether growth is accelerating, profit and loss analysis for margins and EPS growth, and finally technical analysis covering RSI, MACD, ADX, super trend, and more. Each of these 9 dimensions gets a score. Those scores are combined into a master score. Then we added a pros and cons layer, data collected from publicly available financial sources on the internet. To arrive at the enhanced master score, the higher enhanced master score, the stronger the stock across all dimensions simultaneously. This week, Saksoft scored 279 out of a possible maximum, making it clear number one. Now let's move to section 2, the universal distribution. This is one of my favorite part of weekly analysis because it gives you a micro picture of entire market, not just the top picks, but all the 1504 stocks. So here is the full distribution. Out of 1504 stocks scanned this week, only 16, that is just 1.1%, made it to the elite buy category. These are the stocks that scored high across all the 9 fundamental dimensions and have strong technical alignment and have a clean pros and cons profile with no red flag or at least manageable ones. Then we have approximately 180 stocks in the strong buy category. These are good quality business with solid data, but maybe one or two parameters that could be a stronger. Around 320 stocks fall in the buy zone. Decent fundamental, worth considering. About 480 are on the watch list. Interesting, but not yet ready. And the remaining 500 plus stocks we would simply avoid at this stage due to structural issues. What this tells us is that market is selective right now. Quality stocks are there, but you have to look very careful to find them. Our system does that work for you. Now we go to the section 3, the full top 15 alert by list. These are the names that our system flagged as the strong across all 9 dimensions this week. Let me walk you through them one by one. Here you can see all 15 elite picks ranked by their enhanced master score. The green bars are stocks with no red flags. These are the cleanest picks. The red bars have red flags raised by our system. This doesn't mean avoid them entirely, but it means you need to do extra research and apply extra caution. At the top with 279 is Saksoft, a small cap software company in the computers software and consulting space with market cap of around 1790 crore rupees. Second is Lumex Auto Technology at 266, an auto component company. Third, Mobile New AI Tech at 258. But note this has a red flag, so approach with more caution. Then Inventurous Knowledge Solution at 251, IT enabled service. Kernes Microsystems at 249, transport related, but red flag. Varco Engineering at 242, auto components. Resington at 240, a stock we already hold in our own portfolio. Bengal and Assam Company. Superiors Life Science, Kalyan Jewelries, Indotech Transformer, TAL Tech, Maharashtra Scooters, Mansal Roofing, and Rosary Biotech around the list. Now we are going to spend majority of today's video on Sexoft because it is only the top big but also stock we have personally invested in. So let's go deep dive. Section 4, Saksoft Limited, PSC code 590051. This is a small cap software company, enhanced master score 279. Final rating strong buy with fundamental and technical alignment. No red flags. Pros and cons score 16 out of possible maximum, which is excellent. This is by every metric our system uses. The number one pick of the week. Let me now take through every single layer of this analysis. Let me give you the complete snapshot of Sexoft in one slide. Enhanced master score 279, number one in this week. Market cap 1790 crore rupees. This is a genuine small cap. Current market price of June 3rd, 145 rupees and 95 paisa. Our entry was at 142 rupees. PE ratio 14.24 times. This is actually very fair for software company of this quality. Debit to equity just 0.02. The company is almost completely debit free. ROE over 5 years 31%. Excellent. Sales corp over 5 years 30%. Profit corp over 5 years 30%. And screener data actually shows 32.7%, which is even better. Net margin 15.1% consistently maintained. Operating margin 17.8%. Promoter holding 66.72%. Stable, which is positive signal. Field trend, this is one watch point. Fields are selling. We need to keep eye on this. Technical score 74 out of 100. Rate good. Master technical analysis score 263. A strong buy. And free cash flow has been positive for 11 consecutive years. That last point, 11 years of positive free cash flow, is something very few small cap companies can claim. Now let's look at fundamental scorecard in detail. This chart shows you how Saksoft scores across each dimension and the score versus maximum possible. Cash flow 10 out of 10, perfect. The company has been generating consistent operating cash flow year after year, and free cash flow has been positive for 11 consecutive years. That is exponential. ROE 13 out of 13, perfect. Return on equity over 10, 5, 3 years consecutively above 25%. With recent years touching 31 to 33%. This is hallmark of the capital efficient business. Balance sheet 10 out of 10, perfect. Debit to equity of just 0.02. Reserves are growing, assets are growing. This is a rock solid balance sheet. Sales growth 14 out of 14, perfect. Every single time period, 10 years, 5 years, 3 years, TTM, sales growth is strong and consistent. Profit growth 14 out of 14, perfect. Same story on profit. In fact, growth is accelerating. The 3-year CORG of 39% is better than the 5-year CORG of 30%. Profit and loss 11 out of 12, near perfect. Operating margin, net margin, EPS growth all strong. The slight detection is like from every recent dip in last ROE from 33% down to 21%, which we need to watch. And final shareholding 5 out of 10. This is the weakest dimension. Promoter is stable but fields are selling. Deal holding is negligible. This is worth watching but not deal breaker given the strength in every other dimensions. This chart tells a very powerful story. Look at the three groups of bars for each time period. Sale cork and profit cork are almost identical at every single origin. 10-year both 25%, 5 years both 30%, 3 years both 39%, TTM meaning trailing 12 months 35%. Now why is this significant? Because when sales growth equals profit growth over the 10 years, it means company is not sacrificing margins to grow. It is growing efficiently. Many companies shows good sales growth but profits don't keep up. That usual means rising cost or poor pricing power. Sexup shows the opposite. Growth is disciplined, margins are maintained, and look at the ROE trend. 26% at 10 years, 31 at 5 years, 33 at 3 years. That is improving return on equity, which means business is getting more efficient as it grows, not less. The only concern is last year ROE dropping to 21%. This could be a one time impact or start of the trend, and we need to monitor the next quarter results carefully. Now let's talk valuation, because one of the most common question I get is this stock expensive? And honestly, when you look at sex of valuation, the answer is no. It is surprisingly reasonable for the quality you are getting. PE ratio 14.24 times. For context, the border IT sector in India typically trades at 25 to 14 times earnings. Sexopt at 14 times is a significant discount to peers, and remember, this is a company growing profits at 30% compounding annually. The PEG ratio, which is PE divided by growth rate, comes to around 0.47, well below 1, which typically indicates undervaluation. PB ratio 8.82 times. This does look high on the surface, but remember, software companies are asset light. Their values their people and intellectual properties, not fixed assets. So high PB is expected and acceptable here. Debit to equity 0.02, as close to debit free as it gets. Net margin 15.1%, excellent for small cap software companies. Dividend payout 17.1%. The company is returning value to shareholders consistently. Taken together, this is the company that is growing fast, is almost debit free, has strong margin, pay dividends, and yet trades at PE of just 14 times. That is core reason it scores high on our system. Now let's look at the technical picture for Saksoft as of June 3rd. The overall technical score is 74 out of 100. Rate good with buy signal. Let me walk through each indicator. RSI 54.8. This is a neutral territory. The stock is not overbought, not oversold. This is actually a good entry zone because there is a room to move up without hitting overbought condition immediately. MACD histogram positive 0.38. MACD is showing bullish movement. The histogram is positive, which means the short-term moving average is above the long-term moving average. ADX 21.4. This is on the lower side, which tells us the current trend is not very strong yet, but this can seen as a stock that is building up and about to start more directional move. Super trend bullish. The stock is above its super trend line, which is clean bullish signal on the indicator. MFI or money flow index 171.5. This is a strong buying pressure territory. Money is flowing into the stock. Boilner brand percentage B 0.66. The stock is the upper half of the Boilner brand, which is bullish position. Now the two caution points. The stock is currently below its 200-day moving average and also below VWAP. These two factors explain why the score is 74 and not higher. Being below MA 200 is a key risk. It means the longer term trend has not yet confirmed a full recovery. However, super trend bullish, MACD positive, MFI strong, and RSI neutral all suggest the movement is building. Our signal is buy, but with awareness of the MA 200 position. Now let's go through the pros and cons for Saksoft in detail. This is the final layer on top of the technical and fundamental score. The pros are very compelling. First, the company has significantly reduced its debit and is now almost complete debit free with a debit to equity of just 0.02. This is incredible for small cap company. Second, profit core of 32.7% over the last 5 years as per screener data. Third, the company maintains a healthy dividend payout of 17.1%. It is the rewarding shareholders consistently. Fourth, median sale growth of 18.3% over 10 years. Long term consistency. Fifth, fresh cash flow positive of 11 consecutive years. Sixth, ROE consistently above 25% across all the origins. Now, the cons and watch points. The stock is trading at 8.82 times book value. This is on the higher side. At 2D returns are minus 27%. So the stock has corrected significantly from its yearly high, which is actually why we see the attractive PE of 14 times. Phil's selling trend is something to watch every quarter. Below 200-day moving average is technically risk. ADX of 21 is weak, meaning the trend isn't established yet. Last year, ROE fell to 21% from 33%. One quarter or 1 year blip or trend change, we need to watch the next result. But here is the key insight. Despite all these caution points, the fundamentals, the balance sheet, and the cash flow and growth trajectory are so strong that our system still rate this as number one allied by of the week. The score of 279 reflects that. Now, section 5, and this is the one you have all been waiting for. Our actual entry into sex of where did we enter, where is the stock now, what are our price targets, and where is our stop loss. Let me walk you through this completely transparently. Here is our complete entry story for Saksoft. We entered at an average price of 142 rupees. We placed a total of 71 orders. This was a systematic stagnant accumulation over the time, not a single lump sum buy. This kind of disciplined entry strategy reduced the timing risk significantly. The total amount invested is 10,080 rupees in this position. As of June 3rd, the current market price is 145 rupees and 95 paisa. That means we are currently up approximately 2.78% from our average entry, a gain of 71 rupees on this position so far. Now the target one is 180 rupees, that is potential gain of approximately 26.8% from our entry. Target 2 is 220 rupees, a potential gain of 54.9%, and our hard stop loss is 120 rupees. If stock falls to this level, we exit a position that represents the maximum loss of 15.5% from entry. The risk reward ratio here, risking 15% to potential gain 55% is approximately 1 to 3.5. That is healthy risk reward. Remember, we are investing at 14 PE with 30% profit of CAGR, almost zero debit and consistent cash flow. Our thesis is simple: the market has temporarily mispriced this stock due to broader small cap correction, and as the company continues to deliver results, the price will reflect the fundamentals. Section 6, portfolio update. Let me show you exactly where our four current position stands as of week 23. Full transparency, the good, the not so good, and the rationale for holding each position. Here is the complete portfolio snapshot. For position, total invested approximately 19,968 rupees. Let me go through each one. Position 1, BSc Limited. We bought at 4,255 rupees. Current price 3,881 rupees. That is a loss of 374 rupees, or minus 8.79%. The reason we are still holding is that BSE is rated strong by in our system. Exchange the business are structural compounders, and the short term volatile is noise. But we are watching position to Redington Limited. We bought at an average of 223 rupees across 17 orders. Current price 238.8 rupees. This is a gain of 268 rupees and 60 paisa, or plus 7.09%. Redington also futures is our the top 15 elite picks this week. So fundamental thesis remains intact. Position 3, Sika Interplant Systems, to order at 920 rupees average. Current price 934.99 rupees. Gain of 29 rupees and 80 paisa, or plus 1.62%. Small position performing in line. Position 4, Saksoft 17 one orders at 142 average. Current price 143 rupees. Gain of 71 rupees, or plus 0.71%. This is our largest and most conviction position. Overall portfolio, Total current value 9,963 rupees against invested 9,968, effectively flat on the portfolio. Three of our positions are in the green. The portfolio remains borderly healthy with strong fundamental supports across all the four mains. Section 7, and this is the section I want every single viewer to pay close attention to. We have talked about a lot of positive today, but responsible investing means understanding the risk equality well. So let me walk you through the red flags and risk factor clearly. Here are the six key risk factors every viewer must understand before acting on anything in this video. Risk 1, small cap risk. Saksoft is one of 1790 crore rupees small cap company. Small caps by nature are more volatile and can be less liquid than large caps. This means price can move sharply in both the direction. Never put money into a small cap that you cannot afford to stay invested in for at least 2 years. This is medium to long term investment is not a trade. Risk to below MA 200. The stock is currently below its 200-day moving average. From a pure technical standpoint, this is means the long term trend has not confirmed bullish. We are comfortable with this given strong fundamentals, but you must be aware of it. A decisive daily close above the MA 200 would be a strong confirmation signal. Risk 3, FIAL selling. Foreign investors are currently net seller in the stock. This is a watch point. At the next quarterly shareholding disclosures, if FIAL selling accelerated, we will re-evaluate. If promoter also start selling, which they currently are not, that would be a red flag to act on. Risk 4, had to be changed down 27%. The stock is down significantly from its high. For existing investor at higher levels, this is painful. For pressure investor, this is concern is actually what creates the opportunity at PE of 14. But always be honest about your average price and set a clear stop loss. Risk 5, this is not SEBI registered investment advice. I am not SEBI registered research analyst or investment advisor. Everything you see in this video is algorithmic analysis for educational purpose only. Please do your own research and consult a certified financial advisor before making any investment decision. Risk 6, system limitation. Our scoring is based on historical data from screener, BSE, and technical indicators. Markets are forwarding looking. Fast performance does not guarantee future results. Always triangulate with your own analysis. And that is a wrap on week 23 of Beautiful Mind. Let me quickly summarize what we covered today. We analyzed 1,504 stocks using master analysis system. Only 16 made it to elite by category, just 1.1% of entire market. Our number one pick this week is Saksoft Limited, small cap software and consulting sector. Enhanced master scores of 279, almost completely debit free. 30% profit curve over 5 years, PE of just 14 times, a significant discount to border IT sector, no red flag, and a technical buy signal with a score of 74 out of 100. We personally entered at an average of 142 rupees. The stock is currently trading at 145.95. We are holding the position with the target 1 at 180 rupees and target 2 at 220 rupees. Our stop loss at 120 rupees. The risk is reward is healthy and the fundamental thesis remains completely intact. Our portfolio of four stocks, BE, Regenten, Sika, and Sakasoft, is borderly healthy. Three of four positions are currently in profit. We continue to hold all four with conviction based on our data. If you found value in today deep dive, please hit like button. It genuinely helps us reach more investors who are trying to make data driven decisions. Subscribe to Beautiful Mind and hit bell icon so you never miss our weekly analysis. Week 24 is coming. We will update all score tracks, Saksoft progress against all these, and reveal only new intents to elite by list. Drop comment below. Tell me what you think of Saksoft. Which stock from the top 15 caught your eye, or any question you have about the scoring system. I personally read every single comment. Thank you so much for watching. Until next week, invest wisely, stay curious, and always remember, beautiful minds invest with data, not with emotion.